welcome back to my channel. If you are new, please don't forget to like and subscribe, and I make a lot of videos. And if you want to make any particular video, I'll make one. A lot of people kind of asked me to make a video on the moving averages, so I'm gonna kind of show you how to set up moving averages in thinkorswim, trading view, and also what does it means and how it works. Okay, so let's get it started. So moving averages, as the name suggests, moving averages is the average price of the whatever day you selected. For example, if you selected 10 days moving average, it's just the moving average of the last 10 days. So the stock price was running, whatever, 10, 20, 30, 40, 50. It just adds all those and divide by 10, whatever the number is. We have, if it's a 10, so that's all it is. And it creates a line just joining the point, right? This is the last 10 days, this is last 10 days, this is last 10 days, and make a line. That's all. It's a moving averages. Moving averages, you can set it whatever you want, basically whatever days you want, but mostly from my experience and most people's, if you see what are the significant days are 21 days, 50 days, at 200 days. It just gives you a long trend. What moving averages does is, if you look at the daily, there's a lot of noise in the price actions, right? Like up and down and up and down. It just smooths out, just clean out those noise. That's all it is. And it tells you whether stocks or equity, whatever it is, it's in an uptrend or downtrend. Also, moving averages act as in support and resistance. Supports when it's in an uptrend, and resistance when it's in a downtrend. So let's look into some stock, I guess. Okay, let's set moving averages, right? We are in Microsoft right now. Yeah, we are in Microsoft right now. Just go to the indicators. I added in favorites, but you can just do moving average, right? So just moving average, just click one. We'll just start with one. So this is moving average. So we will do 21 days moving average. So this is the MA moving 9 days moving average by default. If you want to change it, so you can always customize the color you want. If you want to make it, let's say purple, that's there. So you can choose the color whatever you want, and in the input whatever the length you want. Let's do 21, right? So you can choose anything, but let's do 21. Source is closed, so basically you can actually select what price you wanna count in a movie. Was it a closed price, open price, or high or low, and things like that. So save as in default and do that. Boom. So now this is our 21 days moving average. If the stock price is above this 21, that's an uptrend, right? Uptrend. And if you look at that, a lot of time it just bounces off that 21-day moving average. Look at here, right? For short terms it is great, right? This Microsoft went to 52, then kind of came back 148, then it acted as a support, then went up, then down, support. So it's a one of the great way. Sometimes it does break, right? When March, April, this is, yeah, breakdown. It just broke through all the support and everything, right? It was a downtrend, and once it crosses it, you could literally say, oh, okay, now I think we are starting to get the uptrend, and it just started booming. And look at that. Again, as I always says, it's never perfect. It just like touches and bounce up. There's always noise, so you need to kind of be careful. Like it's never a perfect straight, just touch it and go back. It may kind of bounces, fake out all the time here and there. So this is 21-day moving averages. Now we're gonna add 50-day moving averages. So go to your functions again, just click the moving averages, and it just comes out. Boom. Now we're gonna change it to 21-day again, but we're gonna go setting and make it 50-day. So now you have a two line, right? 50-day. See, so when the short term moving, so shorter terms in this case 21, then the 50. So when it's up, it means we are in an uptrend. So we're like really close, kind of, you can see that, right? It wasn't moving anywhere, it was just on the sideways move. Then yeah, it was in a downtrend before that. It was in a downtrend on 19. Then it literally started in uptrend here. then uptrend, 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 uptrend here. So this was a pure uptrend from 136 till all the way we went like 188, almost 170, 180. Then we started downtrend, which did not last it quick. It was really quick. But if you look at that, you could literally enter somewhere around 170, and still we are like what, 30, 40, so 20, 25% up. So this kind of acts pretty good. So this is 50-day moving averages. We can look into the other ticker too. And another important moving averages people kind of for long term is sorry, I'm not comparing, is 200 days moving average. So moving average right here, just set it out to 200. That's 200-day moving averages. So that tells you the long terms, and if it crosses 200-day moving averages, that's bad, right? It's totally kind of any ever like it's we are in a pure downtrend. But till everything is up before 200 moving averages, we are in an uptrend. I think we can kind of look into the SPY, right? See, we are in a pure downtrend for a little bit, right? Like our 200, cause it bounced back so much, our 200, but as soon as it just hit that, then we kind of flew from here. But that's where kind of it started, just 200 getting 200 moving averages at the down. It's a lagging indicator, so it will not tell you exactly because you are calculating the 200-day moving averages. But if you look at that, right, this 50-day moving average acted perfect support, right? Yeah, perfect support right here. So sometimes here it kind of acted as a resistance, bounce back, then bounce up. So that's where you use moving averages. These are like very simple, very starter, great way. Learn them, practice them, and see what works. People even try with different time frames. Like some people try 9 days, 15 days, 20 days. So play around with it. Like what may work for me may not work for you, but these are not exact sciences. But also I've seen like some moving average work with some stocks and whatnot. So that's a good practice. So let's look at the Tesla. See Tesla. This is Tesla 200. Perfect bounce of the 200 moving averages, right? Like if you kind of looked into it and it touches there and it bounces and you traded off like 421, and you could literally kind of wait till here. So this is moving averages you are trading up probably like for the long term, right? Not very short term, not intraday. But if you are looking at long terms, like it, look at this, it touches 200 movie, and if it touches 200, it's a good price too, right? You want to buy some stocks and you believe in the company and everything, and 200, even 50, right? Even 50 moving average, that's a good price. Then because right now it's way high, it has to touch it, right? It's gonna bounce back sometime. For example, think about it, a lot of people thought, oh, like it went up and up and up, you probably don't want to buy, but you could have bought it right here, or even it kind of crossed the 21-day moving average, could not touch quite on 50-day, then it kind of bounced back. So yeah, so if you are doing long terms, you can definitely use moving averages. Also the cross are very significant, meaning uptrend or downtrend. This is the uptrend right here, downtrend, it was almost a bottom, but downtrend, then kind of moving, then crossed again, we started uptrend again right there. So you may not get like right price, but if you're looking at the long term, I think it's a great strategy. Yeah, that's it for now. If you have any question, comment, don't forget to comment below. Other than that, see ya. Don't forget to like and subscribe. Thanks.